Alicia's here, Alicia Levine. I'm going to give her a chance to adjust her S&P target. She's head of investment strategy and equities at BNY. And you're at 5,700.
We are.
But you expect the market to move higher.
Yes.
If liquidity, you know it's at 57.45.
Oh, I do know that. I do know that. Look,
okay, this is where you can do it. How about 50? Do I hear 58?
So I would expect the market to move higher into the end of the year. I'm not going to put a price target on it.
Why not?
We moved our price target 3 times this year already, and we were actually pretty high coming into the year. So we've been bullish for about 2 years now. We got rid of our recession call about 18 months ago, raised our earnings target for the S&P, and with that, we raised our year-end targets pretty high. We came in bullish. I'll say the resiliency of the market this year, we're up 20% year to date. Right. As you said, 42 new highs of the year. I think the resiliency has been the most surprising thing in the market. If you think about this year so far, we've had 2 hot wars that are kind of being fought to stalemate. We've got Houthis lobbing missiles in the Red Sea. We had
oil's
down, and we had a resurgence of inflation in the first quarter that, caused a little bit of a bond market issue, but it did not cause an issue in the equity market. And so here we are, up 20% year to date, and we're kind of tracking last year's up 25%. If you look at it, it's kind of it's a two-peat, it's a twin-peat. Like, it's looking pretty similar.
I thought you were saying I wear a toupee. Didn't you think she was saying that?
No, that's
I'm really sensitive when people say that.
I would never say that.
It makes me think that my actual hair is so bad that it looks like a toupee.
It's like when people tell you look much better in person.
Yeah, they do. They go,
which one is that? What's better?
You're much fatter. No, they don't say it. I don't know if you saw David Tepper, but one of your reasons for being so bullish, with the Fed cutting into a soft landing, which is a little weird, I think, in itself. It's like the Fed cutting into a strong economy. I'm not sure why, but that's not here nor there. You do think 240 basis points is not going to happen, even though that's baked in. But Tepper, in talking about the China stimulus, you say it's bullish for equities here. He almost said it's bullish for equities there because here we're already at 21 or 22 times earnings. He has a valuation problem, not a terrible problem, but doesn't think the U.S. is as attractive as some other places. Do you go around the world, or are you mostly here?
So we go around the world, and that was a great interview, by the way. So he's right that it's very bullish for Asia, but we're allocated, overweight to U.S. large cap. And if you think about the fact that the S&P is 40% revenues from overseas, this is bullish for the global economy, right? Because it puts a floor on some of the consumer stocks. It puts a floor on kind of the areas of the world that were looking kind of stagflationary. So we think it's bullish. We don't trade. And so ultimately, the emerging markets trade or the China trade is exactly that. We have taxable clients. So, we take a really strategic view of where growth is, and it's in the U.S. The China investment thesis also has to rely on confidence on their capital markets and shareholder protections,
and that they don't invade Taiwan.
And that they don't invade Taiwan. And I'm not willing to make that bet. Right. I'm willing to say it's better for developed economies globally. It's great for Europe, and it's great for Asia.
And you're not afraid of tech either, because it's outperformed. What do you say? How many out of the last 15 years it only has underperformed twice?
And one of those years it underperformed the S&P by 1%. The real year that it underperformed was 2022, which is exactly when you would expect, because you have we had 9% inflation, and we had the Fed about to come in and raise rates really high to get rid of that 9% inflation. So that makes sense. If you look at the cash flow and the margins, it's impossible to dethrone tech, even with the CapEx spend that we're seeing right now. So it had a hiccup this summer because of the second quarter earnings and the CapEx spend, but it hasn't actually made a dent in the comparison between where the margins and cash flow are in the market for the large cap tech versus everything else.
Even though it's richer than most sectors, but you still think, with that in mind, short term, you still think that's where the place to be.
We're still there. We're still U.S. large cap.
But it is rich in value.
It's definitely rich. Not all of the companies are rich. But it's rich for a reason, and I think there's a new regime here. I hate saying it's different this time, But if you just look progressively each decade of where the cash flow is coming from, it's really located in these companies. So that's why we like it. But also, look, the stimulus, the Fed cutting, the China stimulus, and oil, having reached $65 a barrel 2 weeks ago, is also bullish for cyclicals. So we're seeing, financials look great, cyclicals look great, industrials are holding in there. So we just think it's going to be something of a melt-up situation here.